Good evening, everyone, and welcome to the third session of our web series, which is called Think Tank. Well, Shark Tank did actually come to our minds, but that title was already taken. Okay, my name is Ankit Bansal, and I'm the founder and CEO of Sapphire Human Solutions. Sapphire is one of the top 10 retail executive search firms in India. And I founded this firm in 2008 with Mr. Anand Rathi. And over the last 12 years, now we've completed more than 900 CXO frustrations with our clients across BFSI, tech, consulting, industrial, pharma, healthcare, infra, and real estate. Well, Think Tank, gentlemen, is a melting pot of some of the most fertile brains in our country coming together to share and exchange thoughts and ideas with stalwarts of the industry. And to guide us and advise us today, we have someone who's, I think one of the most capable and promising CEOs in the banking sector, Nitin Chugh. I've known Nitin for a long time. Besides being a great professional, I think he's a fantastic human being. He's currently the MD and CEO of Ujjivan Small Finance Bank. Before joining Ujjivan, he has spent a long tenure with HDFC Bank, where he did various stints in various roles. With his last role was being the head of digital banking for HDFC. He's a BTech in computer science from NIT Kurukshetra, besides being an MBA. And he started his career with Excl, worked in Xerox, Tansi, and of course, spent more than 18 years with HDFC Bank. I know we're all on mute, so can I request everyone to give a thumbs up to Nitin. Nitin, thank you so much for being with us. Thanks for your time. Really, really appreciate it. What I'm going to do is call out all our brilliant participants that we have today. And if I can request that everyone introduce their companies for the sake of all others who are present in today's session. So I'm going to jump straight in. And first up, we have MN Srinivasu from Billdesk.
Hi, this is Vasu. I'm a co-founder of Billdesk. It's a company in the digital payments arena.
Sure. Please, Vasu, go on.
No, that's about it. I'm keeping it short and quick so that we can have everybody speak.
That's nice standard set, Vasu, but we can. But I guess Billdesk does not need any introduction. So thank you so much for your time. Can I now request Vineet Tyagi, who's the co-founder and the CTO for Biz2Credit?
Just to introduce Biz2Credit, Biz2Credit is a digital-only lender. We operate one of the leading, digital-only lending operations in the US. Our portfolios of $3 billion plus. We also have a digital banking platform that is branded as Biz2X that's being used by a lot of leading banks. And with the COVID digitization, push happening, leapfrog happening, Biz2X has been helping a lot of banks deal, with their digital needs in a matter of days and weeks instead of months and years. So that's what I do with my teams. We make the digitization real for banks as well for ourselves, our lending business as Biz2Credit.
So, hi everyone, this is Ritesh, co-founder of FlexiLoans.com. At FlexiLoans, we give working capital finance to small and medium enterprises. And we are also truly digital. We have office in Mumbai, but we would have given loans in more than 1,000 cities across India.
I request Akshay Malhotra from EarlySalary to tell us about his startup.
Hey, I'm Akshay from EarlySalary. We're a digital lending startup focused at giving loans to salaried professionals. I think we run two lines of products. One is what we call as instant salary advance, working with corporates directly. The second is instant loan for any salaried professional. Typically, I think pre-COVID, we were doing close to 75 to 80,000 loans a month. I think currently we're doing close to 35,000 loans a month. And I think interesting time for all of us. The good part is I think most of the COVID impact is over. Moratorium impact I think is down to single digits now, and I think we are back in the swing to grow our businesses again. So I think this is the right time for all of us to start thinking through how to build the next level of fintech lending in the country.
Can I now request Raman Kumar, who's the chairman of CASHE, to talk about CASHE and his company?
That's a coincidence. Hi, Nitin. Hi. Akshay introduced the business that I'm in. It's almost identical. We do similar things, and we compete, I think, in a way. Our book is around the same as what Akshay was mentioning, and we deal with millennials in the category of 23 years to 39 years. We give them, we don't give them salary loans as much as we give them money to, whether spend or otherwise. And typically we give between 10,000 rupees to 3 lakh of rupees. Average loan size is about 50,000, and the average tenor is in the region of 4.5 months.
Okay, can we move on to Hema, who's the Chief Business Officer of CreditMantri?
So CreditMantri is a credit profiling platform, and we get customers onto our platform, under the primary purpose of trying to help them optimize on their credit health. So we have customers who come to us in various stages of their credit health. We use a fair amount of proprietary profiling technology to be able to help them with their improvement of their credit and financial health as a whole. So we actually work with quite a few people who've just spoken. So with Akshay and with Payswiff and with CASHE and FlexiLoans. And so pretty much we work with everybody. So we're a platform player. We also do digital recoveries. So when customers come to us with a possible bad credit history, we actually sync up with the lenders that they have issues with, and we actually help them empower themselves by clearing some of these delinquencies. So I'm happy to be part of this forum. Thanks so much for inviting us.
So we are a savings and investment platform, and we divide the world into two simple halves: stay rich and get rich. Our whole understanding is that the existing ecosystem has served the stay rich population, and the get rich population, which is digitally savvy, is not got access to products and services in the physical distribution world. So we are trying to build a B2B2C model where we've taken down this whole thing, and we've actually bifurcated savings and investments to be two separate problem statements. In the ecosystem, we kind of use these two words interchangeably, and we have now users in more than 600 towns and cities of the country. So like I said, happy to be here, and thanks for inviting us.
Hi. Good evening, everyone. I am Kumar, co-founder at Mera Cashier. So Mera Cashier is a mobile application for small traders. We are helping to digitize their credit transactions related to customers as well as related to suppliers also. We launched the app in last year, 2019, and obviously it's a long journey. We have just completed 1 year, and as many companies are there from fintech space and especially from lending side. So actually, right now we are not into lending, but we are getting so many requests from our retailers that we need some working capital support. So looking forward to connect maybe some of them, maybe for partnerships and collaborations. Thank you.
Okay, thank you so much, Sunil. Can I request Amit Sachdev, who's the CEO and co-founder of Mind Financial Services?
Thanks, Ankit. At Mind Financial Services, we are trying to focus on the age-old problem of MSME financing with very strong focus on the supply chain financing side. Focused on the dealer financing and vendor financing both. So I don't know where did you get this content from, but this is what one of our group companies does, which is Mind Integrated. But Mind Financial Services is into a different space altogether, which is trying to use fintech platform to solve for the supply chain financing problem. We are about to go live, but before this, I was the founder of CoinTribe and exited there early this year, where again the focus was on MSME financing, both on supply chain financing side as well as on term loan side. And at CoinTribe, we spent about 5 years trying to build almost a 475 crore portfolio. So yeah, that's where we are. Happy to be here. Happy to see some of the old faces and happy to connect with some of the new ones.
Hi guys. Hi Nitin. Nice to meet everybody and meet up here. So I co-founded Payswiff, which is a digital lender, one more in the fraternity. I think we started lending personal loans to people back in 2016, and we exited the company in awesome timing. But we exited late last year to PayU. So we at that point had done about 1,500 CR in loans with an average ticket size of about 80,000 rupees. I worked as CBO of PayU, and recently I exited PayU to figure out what next, more startup setting versus a corporate setting, figuring out what is next steps for me as a founder and also as a investor. So I have been investing in the next level lending as well as other startups and mentoring a few of the early stage founders and looking forward to do a lot more of that.
Hi everyone, this is Vinay from Ariam. Nice to see a bunch of young guys to discuss about this. Very quickly about ourselves, we are an autonomous AI platform for financial institutions. We believe all product delivery and financial services can be done fully autonomous, and that's what our goal and aim is. We're aiming to build a fully autonomous AI system using deep learning and reinforcement learning to automate almost all core functions in any given financial services product. While we provide the stack, we also provide solution modules for financial services to just plug in and automate those tasks. So that's quickly about ourselves.
Can I request Nitin Jain, who's the co-founder and CEO of OfBusiness?
Hi, thank you so much, Nitin. So we basically banking platform where we essentially do unsecured finance, and against that we don't give them money. We basically give them raw materials. Now raw material is in the form of commodities such as steel, cement, agri commodities, and so on and so forth. So we help the SMEs with their working capital financing. So we'll help them lower financing through informal means, through traders, etc. And we also help them lower the cost of purchase of raw materials. So one change, I'm the co-founder CEO of our new venture called OAgriFarm, and I'm the co-founder and head of sales and new initiatives at OfBusiness.
Thank you, Nitin. Thank you everybody for being part of today's session. Coming on to Nitin. Nitin, you headed the digital banking for a long time for HDFC, which is the largest bank in this country. And we also have today a bunch of entrepreneurs who are trying to disrupt the digital space. So I'm very keen and looking forward to this discussion. I'm sure everybody is. So Nitin, over to your thoughts, ideas, suggestions. The floor is all yours.
Thank you for that, Ankit, and thank you everybody for your introductions. I'm sure our paths have crossed. A lot of us have interacted in the past also, so it's not an unfamiliar setting today. Always very happy to be talking to the fintech community at any point in time. I really don't, have a list of things to cover, but I think I thought we'll just keep it free flowing. And I was telling Ankit that maybe it just makes sense to talk more in the context of what we're going through right now, so that it's easier to understand how we are preparing to come out of this, as all of us probably agree that, the worst is maybe behind us, at least in terms of the scare on the health side. We seem to be a little better prepared in terms of handling COVID. Yes, there are some references to what I've done in the past, but that is not necessarily, my point of view all the time in terms of what large banks do and what small banks do. Technology, I think, is a great leveler, And I firmly believe that the opportunities for a smaller bank like Ujjivan, where I work now, is far more pronounced using technology. The chance to grow, the chance to pick up scale, the chance to get into partnerships. And on our side, I think we are very actively trying to work with as many fintechs as we can, as long as it is meaningfully important for us. The big change that I do notice between how a large bank operates and how a bank like us operates is, I think one, there is very clear understanding of the target market. So in Ujjivan, we are very clear about what we are trying to serve, who we are trying to serve, and that is something that we define as our purpose and what we stand for. While HDFC Bank wants to be a world-class domestic bank, that is what they stand for, and they try and serve the middle class and the affluent. And of course, they also try to serve the rural customers and many other categories of customers. I think in Ujjivan, we only try and serve the lower income groups. We try and work with the small businessmen. We try and work with people who like to buy affordable homes. So our category of customers is really the aspiring middle class, as we call them. Now, we also realize that because we are a 3.5-year-old bank, just only that much, the advantage that we have is that our technology is recent. We don't have too much of legacy issues. But we also realize that the ability to grow for us from here on will not necessarily be the old model of putting out your own distribution, adding product lines and adding branches and adding people. At least our view is that we should be able to get into meaningful partnerships with fintechs and like-minded people who want to serve this same market that we want to address, and therefore be able to pick up scale in a far shorter time. And those are the kind of things that we are trying to chase now. It is very important for us to also understand, and I do believe a lot of you have probably experienced this in your interactions with banks of all kinds, mid-sized, large, small, all kinds of them. I'm sure in the absence of small finance banks till about 3 years ago, and I would imagine most of the small finance banks are probably now only coming out with their digital strategy, etc., because most of them were transiting from being whatever they were earlier and mostly MFIs. But at least till 3 years ago, there was a very clear distinction that fintechs were making between the large banks and the mid-sized banks, and most fintechs would have preferred a mid-sized bank to a large bank, probably for the fact that the turnaround time was quicker, the decisioning was faster, the bureaucracy was a lot lesser to deal with. I recently came across a report also. I was trying to find that out today, but I somehow couldn't find it. But I'm sure a lot of you have probably seen it, that fintechs on an average take anywhere between 6 to 8 months from the first meeting to get any kind of a second meeting, a meaningful meeting into a bank. And then, the whole discussion and the proof of concept. And many of you would have also experienced that maybe just about 20% of the proof of concepts are paid proof of concepts, and banks don't like to pay for those. And it is always like it's probably always like you're trying to build a relationship with somebody who is always telling you that I know what I do and I know what I want, and therefore you should be thankful that I'm trying to work with you, rather than the other way around. We somehow never had that view in HDFC Bank. We were always open, and I think we set up one of the largest practice of working with fintechs in the whole digital banking space. I have tried to do the same even in Ujjivan, and considering that we are a much smaller bank, we do realize that it's far more important for us also to work with as many people who are like-minded, as many people who can complement our efforts to grow. The second thing is that during this whole time, last 6 months, when we got into the whole lockdown, when things were completely uncertain about, whether it's going to be there for long, whether it's going to be very bad, whether it's going to be like what Italy and Spain were going through, and US also wasn't as bad at that point in time in March, we were uncertain as to what we should be planning for. Should we just brace and go through the lockdown phase, 1 lockdown, 2 lockdowns, etc. But at that point in time, we realized that we will anyway keep the bank running, because as an essential service, you do need to keep the bank running and operational at all points in time. So the lights were on at all points in time. But we started to work on how do we start retooling for future? How do we start, challenging the whole business model itself? And you might know that a bank like Ujjivan and many other small finance banks, the largest business or the more traditional business is microfinance. Now, microfinance is known to be believed to be a very high touch business where there are lots and lots of people who keep meeting lots and lots of customers, and they keep meeting them every day. They keep collecting from them in cash. They keep disbursing loans to them, whichever way it works. And it's a very large set of people who are served through the entire microfinance community and small finance banks and also the larger banks. So we said, why don't we start transforming the business model itself? Why don't we start getting into try to get into a place where we are not dependent on field interactions anymore, because we don't know whether people would like to meet us anymore or not. And that is why the inspiration actually comes from fintechs, because all of you also have a very digital based interaction. I don't know how many of you actually depend on field operations, and I'm sure not many of you would have too much of a field operations, and most of the interactions are happening digitally with customers. So we said we could also do that. And while it is a very high touch and field business, there is no harm in trying out. So we first started trying out with collections, which is completely in cash. And while we had some wallet arrangements, but that was not scaling up to our satisfaction, certainly. We started working with alternate arrangements. We tied up with the Airtel Payments Bank. We started to use their payment points as collection points for our customers because they are in close proximity. And we were able to completely swing the needle from nothing at all to 37% in July, where 37% of our collections actually came through these alternate ways, where we don't have to handle the cash. So I think that gives us the confidence that there is a change that can be brought about. Now the integration with the Airtel Payments Bank, while it was a simple integration, but now it's moving to an API-led integration, and it's opening up a lot many new areas for us to work together. We're already discussing what are the new ways that we can work together. So I'm a big believer that times like these also throw up very good collaboration opportunities. And as long as you have like-minded people, as long as you have people who are willing to invest in the target market that all of us are trying to serve, at least we are trying to serve, there can be extremely meaningful outcomes, and those meaningful outcomes can also be scalable as long as we put them through a quick test and run and then figure out the tech integration and the other nuances. Let me stop here, Ankit, because this is more a recent context than anything else. And I would suggest we probably have a discussion rather than you guys just listening to me, because I can keep going on and on. But I would also love to listen from all of you as to how you guys are seeing this whole situation for yourself.
Sure. Great. Thank you so much, Nitin. Thank you for giving us that on-ground details and understanding. We have a way to raise hands in Zoom, so we would like it to be as participative as possible. Can I request everybody to just raise your hands, and I'll call out, and then you can ask your question with Nitin. Can we start with Akshay, please? Akshay Malhotra.
Hi, Nitin. I think today we have gone through a knee-jolting reaction with COVID. But if you look at, we have, as an industry, we went through 2 NBFC crises, 1 banking crisis, and then COVID. So we were quite hardened out. But what was your 2 messages when it comes to digital companies on mindset as the market is now opening up? What do you think would be your key message for us in that opening up phase? And within that, how do we look at, let's say, the next till March, and how do we look at the next 18 months as we build businesses again?
I don't want to generalize, Akshay, but depending on what your situation is, even in banks, the same thing is happening. There are some people who are just trying to protect their balance sheet right now, and they don't want to think about anything else at all. They just want to conserve, protect, and then figure out what they want to do next. There are another set of people who are saying that I will do all the usual things. I will continue to invest. Obviously, I will defer a lot of investments, and I will not do anything which is not urgent and important, even though it might be essential. But at the same time, I will focus on the core. I will make sure that the fundamentals are protected, right? Especially on the balance sheet and the other ratios. There's a third set of people, which is also seeing that, while you can protect the fundamentals and you can protect the balance sheet, this is also a great opportunity for doing many things. Like people like us are saying that, why don't we transform the business model? Now, we don't want to change our strategy and purpose. So for all of you also, I'm sure when you wanted to start up, whatever you're running right now, you don't want to be questioning that right now, whether I'm in the right business just because of this fact. I don't think that should be a question to be asked unless you've already discovered that in the pre-COVID time itself, right? So maybe that question just becomes a little more harder to answer right now, or maybe a little more clearer depending on where you are. But I don't think people should be questioning their fundamental business strategy or the purpose for which they operate their businesses. And as long as we are not very worried about our balance sheet and our other financial ratios, I would suggest that this is a good time to remodel the whole business if there is a chance to do that and if there is a need to do that. Otherwise, the usual thing is to just wait it out. And I would think that maybe 60 to 70% people are just trying to wait it out and see that how much of impairment happens, how much of damage really comes about, and can I go through it, can I not go through it, will I get the support or not. So the two key messages would be that stick to your core purpose, and don't question whether if you have not already done that in pre-COVID, this is not the time to question the purpose. And the second is that if there's a chance to remodel the whole business and see that if there are opportunities either through collaboration, partnerships, or completely retooling the whole approach, this might be the best time to do that. Because one thing is certain from whatever I picked up with my interactions, with people like you and many other industry players, that there are some behavioral changes which will be permanent in nature. Okay, not just about wearing masks, etc., but in general, there are going to be a lot of behavioral changes in the way people spend, the way people save, the way people invest, the way people borrow. And we are seeing that already in the market, that people are deferring their decisions to borrow. They are very unsure of their cash flows. They don't want to pick up. So the demand is also going to be muted. So the competition can either get intense with the limited demand, or you might have a very, very large white space where there is nobody to serve that demand, depending on who is serving that market.
All right. Can I request Amit to go ahead with this question? Amit.
Sure. Thanks, Ankit. Nitin, my question is pertaining to the huge amount of liquidity which is prevailing in the banking industry. Now, of course, there's huge amount of liquidity, but the credit offtake has been pretty muted for multiple reasons. You talked about people differing demands to purchase white goods. At the same time, where there's demand, banks are being very, very apprehensive about giving credit as well. Now, this is leading to absolutely unthinkable scenarios where some really good quality assets are getting credit at as low rates as sub 4% as well, which is not feasible in the long run. How soon do you see this liquidity situation stabilize? And linked to that is, now that the moratorium is finally over, what are some of the early signs that you're seeing as a bank? And if those signs are positive, do you see that this stabilization will happen sooner than later?
See, the signs are positive, Amit, and the signs have been progressively positive in the last 4 months. Okay, so we track that through multiple ways. One is obviously the collections efficiency, which has been improving. But more importantly, we've been doing customer surveys now pretty much every week, trying to find out the impact on income loss, total loss of income, partial loss of income, loss of secondary source of income, occupation level analysis, location level, occupation level analysis of where the impact is the most and where it is lesser. Now that's giving us insights to the extent of believing that there are going to be at least 2 to 3 dozen occupations which will have anywhere between moderate to severe impact. Now there are going to be people who have had a permanent loss of income also. So they have no other option but to actually change their area of work. Right? There are people who've had temporary disruption of income generation, but they also have probably a secondary source of income. So they are also, probably going to come back a little better than the first category of customers. And yet there are some who have recovered, but their own demand side hasn't recovered very much. So they are back in business, but they are not seeing the same levels of demand as what they used to see earlier. Okay, so it's a mixed bag right now. But in our assessment, I think things will be fairly clearer only by end of October. While the moratorium period has ended, but as you know, Supreme Court has still, held this back till 28th, even though they've not said it's moratorium. But just the fact that they said that, the earlier order of 10 September holds, or whichever date it was given, it's been construed as if the moratorium has been extended, and Times of India immediately ran a story saying moratorium extended to 28th September, and then local news channels have started playing that. And it's very easy to go and influence customers who start believing that they don't have to pay even in this month, right? So that is a struggle that we have, but we are trying to overcome that. But I think things are progressively improving. We just need to give time in this whole restructuring framework to the really impacted people. And the good thing is that in a business like microfinance, there is a very good established practice of doing that, because in microfinance, because these are really the last mile kind of customers, they get immediately impacted if there is excessive rainfall or floods or drought or whatever else. So there is an established practice of, you know, how do you deal with such natural calamities. Most recently, we had that cyclone in West Bengal and we had floods in Bihar and Assam. So we know what we need to do, and we normally give them a payment holiday and reschedule their loans, which is what we're trying to do even now in the whole restructuring framework. So we hope that we'll be able to provide help to the people who are most impacted versus people who are lesser impacted, and they will obviously start coming back to repayment. So I'm not so worried about, you know, the money not coming back. Okay, now it's only hard to say right now that to what extent the impairment might be permanent. But again, we've been very conservative, at least in the last 2 quarters. We've taken provisions to the extent that we wanted to take. Our book is covered to the extent of 2.6%. So we are not worried to that extent also. So it's 82% PCR, which is the highest in the industry. Now coming to liquidity, I don't think this is going to change very much, at least for the next 2 to 3 months, or maybe till December. That's what the general view is. I don't really have a personal view on this, but the real drag because of this excessive liquidity is, you know, you have to make up your mind. Your assets are not growing right now. Okay. So some of the banks who can afford are saying, okay, let me build my liability book right now. Okay. But a bank like us is also trying to strike a balance, saying that do you want to excessively build your liability book till such time that your assets are not going to come back? So we need to strike a balance, you know. So what we are trying to do is to shift the wholesale with retail in this time, rather than growing the whole headline number of the overall deposit book, because we also don't want to add on too much liabilities, because relatively our cost of funds is higher as compared to the larger banks. Even though, you know, we've used this time to also drop our cost of funds, you know, substantially, and every month we're dropping that. But really the drag is on the negative carry, because where do you park the money? Where do you invest the money? We are not lending that money anymore, and now collections have started to come back. So now you have even more liquidity, and the disbursals haven't picked up in the same proportion. So I think we have to manage this. This is where the treasury desks have become extremely important for most banks, and you might have noticed in the first quarter, most of the banks who reported good profits had a large contribution from the treasury desk than the core business lines. We didn't have that. Our treasury desk is very small, and only this year we are actively utilizing treasury. But I think we have to go through this for some more time, this whole pain of excessive liquidity. Till the demand comes back, there is no other way. I mean, you don't see anything else that will happen really, because RBI is not going to have the appetite to suck out any more money.
Sayali, did you have a question or did I miss your hand?
I did originally, and I thought some of it did get answered, but one thing that I've been looking at closely is changing risk models. So as bureau data through moratorium becomes quite wonky and lenders become conservative, it's hard for some newer fintechs to show their ML models and get the lenders' trust to put in capital behind it. So either the FLDG ask goes up, or the fintech start to lend using only the bank's scorecard models, etc. So I wanted, Nitin, your thoughts on innovations in risk models.
I think risk management is at its conservative best right now with most banks, right? So anybody who wants to try out anything in risk management is probably thinking that, you know, let me do the tried and tested before I do something which is not known to me fully. At the same time, there are some logical things that you can do, which is part of the whole framework, but you're not completely altering the framework or trying to change the whole model or the practice. But can you embellish it with a few things? Can you bring about some small improvements? I would think that at least people like us are thinking like that. That is there a way to stretch and extend, like the example of the partnership with Hema's company that I gave. Now it is very, very specific that we are trying to see if we can get some help in collecting from our NPA bucket on a very systematic basis. Okay, so those are logical extensions, but they don't necessarily change the overall framework or the view at the moment, because most people would have reverted back to mean saying that, you know, let me do the tried and tested. I know how this works. Let me not take any chances right now. So purely from risk management point of view, any fintech that helps in enhancing capabilities, stretching, extending it, I think most banks would be more than welcome, more than welcoming. But if it's a complete question of saying that, okay, let me redo your complete risk management model right now, I've come up with some great AI ML technology, people would say, listen, wait, let me first get done with it. We'll talk about it, because I also don't know what's going to happen.
Thanks for the answer. But at least on the augmenting of risk, I would definitely like you to look at a company. And
yeah, of course. It's not like we know everything.
Sure.
Well, Nitin, I'm sure we would love to just keep on talking with you. And I know you had told me that you do have a hard stop at 7:45. We've exceeded that. Any last questions from anybody? Because Nitin, final words, as they say. What should all we be doing from a next year perspective? Do you think it's wait and watch, or we should fundamentally back ourselves up and and then just hope that market will hold up now?
Well, I answered that a little earlier in the conversation, that there is no golden rule, and of course I am not the one to prescribe any golden rules. It is very, very situational in terms of where each one of us are in our own journey. If there is a situation where we need to protect the balance sheet, by all means we should do that and forget about everything else, because survival is also important. If it is a survival level issue, the first instinct should be to survive, right? And all the energies and effort should go towards survival. The second set of imperatives are obviously about, once you've survived and protected, about transforming and retooling, right? And then the whole phase of rebuilding will come back. Okay? But if there are people who are not going through any stress in terms of survival, or people who have already worked on making sure that they are prepared for the exit kind of plan from this whole crisis, they can very well go into the growth phase very quickly. So it's very, very individualistic and different for different people, and I'm sure everyone knows where they are, and based on that, that's how everybody will take a decision. Like I told you, what is our way of thinking right now, considering that we have a certain situation, we have a certain portfolio, we have a certain set of circumstances. So that's our thinking. It may not be the same for even a large bank or a small bank or any other kind of bank. Everybody has their own set of priorities right now.
Great. Thank you. Thank you so much, Nitin. Thanks so much for those wonderful insights. I think you're doing some great job, great work at Ujjivan Bank. For me now, it's really the bank to watch out for in future. And I also want to thank each one of our participants, our wonderful, fantastic, brilliant minds who are all on this session to make it so interactive, so free-flowing. Thank you, everyone, and stay home, stay safe, and stay healthy. Thank you so much. Thanks for your time. Thanks, Nitin, once again.
Thank you. Thank you, everyone.
Thanks, everyone. Bye-bye.
Thank you.
Thanks, everybody. Bye-bye.